Hello and welcome to another episode of Turjo Talks. I'm your host, Turjo. Joining us today is Nei Kuan Chia, no relations to Chia Pets. we just established that one. Managing Director of Socium Ventures. Nei Kuan has spent over a decade in corporate development at Cox Enterprises, where he continues to help manage the investment portfolio alongside his leadership at Socium. At Socium, he helps lead investments in sectors like B2B marketplaces, fintech, healthcare services, and sustainable tech, backing founders with long-term capital and hands-on support. You're like just like me, diving into the coolest place in the world. Not. With more than 25 years of experience in corporate strategy and mergers and acquisitions, he's been involved in over $3 billion worth of transactions and has worked on more than 40 minority investments. Earlier in his career, he worked in management consulting at top global firm and held positions at CNN, Deloitte, bringing a wealth of strategic and financial expertise to today's conversation. Well, thank you. Thanks for joining the show. I appreciate you.
Thank you for having me.
Thank you so much. So that's a lot, that background. So give me a little bit of background. Who are you and how did you get into this?
Born in Taiwan, moved to the States when I was 5, grew up mostly in Florida, Tallahassee. Growing up, my dream wasn't to be in venture capital, wasn't even to be in business. I grew up wanting to be a doctor. So partly, as Asian, your parents like, hey, you got to be a doctor, right? That's the push. And I always joke now with my family, I'm like the black sheep of the family because all my cousins are doctors or engineers. So I'm the only one in the business field. So
I kid around. One of those moments that I just always remember in my life, I was like 6 or 7 years old, very young, and my dad had all the uncles, aunts, cousins, everyone around for a party at home. Yeah. And they go around and they're like, okay, what do you want to be when you grow up? And, I'm as brown as they come, right? So first one's, I want to be an engineer. Other one's doctor. Yeah. Doctor, lawyer. And then looks at me and they're like, I want to own a McDonald's. They're like, oh, crap. The look on my dad's face, like, what the hell? Like, what are we doing wrong in life? So definitely could relate.
Yeah, but it's funny. Like even now, all my cousins are like, "Oh, you're the smart one. Yeah. You're the smart one because you're not a doctor. You're not being an engineer." Yeah. I followed the whole doctor track. Yeah. Went pre-med, an undergrad at Florida State. Actually went to med school.
Oh, cool.
Down in Tampa, and I said halfway through, like, this is not for me.
Right.
I had been a competitive swimmer. I still had the itch. So I said, let me take a year off to pursue, at that time, it was Sydney Olympics. Mm-hmm. And I got done with that and made my second Olympics. And I said, okay.
Good for you. How come we missed that on the intro? A little detail.
Yeah, well, the question then came, do I want to go back to med school or not? And I said, well, it didn't really fit my personality. I like to learn about different things in different industries, always wanting to know kind of how things worked behind the scenes. Right. And plus the drive for competition and continuing my career in swimming was probably more important to me. So I decided not to go back to med school, and I kept on racing and competing. Right. But along the way, your swimming doesn't pay. There's not a big payday like the NBA or NFL, right? So I needed a job.
Right. By the way, how was that conversation with your parents saying?
Oh my God, I thought they were going to disown me. I remember
they probably did for temp reasons.
I remember the day I walked out. I was finishing up my exams, and I said, "Okay, I'm done." So I went. I didn't know what to do. I went to the dean. I said, "Listen, I need some time off. This is not for me."
Right.
I remember going back to my apartment thinking, what did I just do? Like, what did I just do? And my best friend in med school came over. He's like, how's the exam? I was like, no. He's like, you left. You're like first one to leave. I was like, oh, I quit. I'm taking time off. And he's like, what? And I had no idea what to do.
And what was that experience? Was it like, because one of the most courageous things you could do in life, like looking back, is that moment defined everything, right?
Yeah.
How do you come up with that? Like, was it just like you're miserable or just, I don't want to do it?
Yeah, it was a process. Yeah. Like everything in life, when I left undergrad and before I went to med school, one of my best friend's wives said to me, it's like, what if you're called to do something else? What if this is not your calling in life? Yeah. I said, well, I quit. Yeah. I would quit. Yeah. I would walk away and pursue what my purpose in life. Right. And that was the seed that got planted. Yeah. And for the next year and a half when I was in med school, it's like, this isn't necessarily what I thought it was going to be. This is
kind of boring.
I mean, I loved helping people. I loved, the patient interactions, but it just wasn't me because you're just so focused on
the same drill every day. Yeah.
So I remember sitting in my apartment, my best friend's there, and he's like, you got to tell your parents. I was like, I know. I was like, I can't just call them and say, hey, I'm done, right? Like, and I was so scared. I was like, I have no job, I have no fallback, I have all this tuition debt that's now going to be needed to be paid. Yeah. I remember getting a newspaper, started looking at want ads, like, I need to have a plan before I tell my parents. Yeah. But I was just like, I'm going to just drive home and I'm just going to tell them. So literally I drove home in the middle of the night, knocked on the door, and I just looked at my dad and my mom, and I just started crying. I was like, this is not for me. Yeah. I was like, this is not my purpose. And I just laughed because I still remember my mom screaming in the background, yelling at my dad, like, this is your fault. This is your fault. But surprisingly, they saw it. They just saw the unhappiness I had, and it wasn't the joy of life wasn't there. Right. So at that point, they understood, and they were supportive. But there was contingent that I find something else to do in my life, right? Yeah. So I just started focused on swimming, and then one day, I'm at the pool and I run into this guy who happened to be the dean of the MBA school, but he also unknowingly owned a venture fund that he was doing. But at first he came up to me. He's like, "Hey, you're a really good swimmer. I'm practicing for this swim around Key West." Like, and he's like, "I need some pointers. Do you give swim lessons?" I'm like, not really, but hey, I need money, right? I need money, yeah. So I said yes, and every time I gave him a lesson afterwards, we just talked about stuff. I'd always had an interest in like stocks and investing, and that time, it was a .com boom, right? Yeah. And you can day trade all day and make tens of thousands of dollars. Right. And sadly, that's what I did in medical school. I sat in the back on my laptop and day trading Yahoo and AOL and stuff like that. But I was just generally curious about business and why are valuations the way they are? Why is Yahoo valued at this and AOL versus valued at that? And that was just so intriguing to me. So we would have lunches and we'd talk about it. And at that point, hey, this is something that is interesting to me. Right. So he's like, hey, then one day they had a project, I think it was like a dental company that they were raising capital for. And then a biopharma company they were doing a raise for. And he said, hey, you were, with your medical background, it'd be great if you can sit in, help us provide some expertise and knowledge on the other side. On this side. I was like, sure. And we'll pay you. That was the key. Like, we'll pay you for it, right? So I sat in, and it was just fascinating. I mean, understanding, the biopharm, how that works, how drugs are made and approved by the FDA. I'm hooked. Yeah. So I said, hey, is there a way I can learn more? And he said, well, why don't you come work for us? You can be an analyst, an associate, and we'll teach you on the job. Because I was like, I know nothing about business. Yeah, how cool. That's how I learned. And I spent 3.5 years there. I worked my way up. They taught me everything. How to model, how to think strategically, how to value businesses, how to work with entrepreneurs. It was a great experience, and sometimes you just look into things, right?
Yeah. But it's always when you're always looking. Yeah. I had this conversation with my kids this morning. If you're always curious and looking, you'll get lucky. Like that was like the most random run. You're a dean, but you didn't even know that. The venture side of it, and then swim lessons that led to a career. Yeah,
and it's about opportunities, right? Like you sometimes. I always tell this to my son and others. It's like you can't fear things. Like I spent my life fearing failure, fearing that's one of my greatest fears in life is failure. Right? And for those who are competitive, that's fear of failure can drive you, but it also can cap you in what you can do. Correct. And sometimes you have to take that risk.
Right.
You have to step away and say, okay, this isn't for me.
Right.
Because if I kept on pushing on the med school route, I would never
Right.
gone this way.
No.
Right? That opportunity never would have existed.
Right.
And I can say today, looking back, I'm so much happier with my life.
Right.
I'm so much happier with the things I get to do and I get to learn about.
Right.
I mean, from biopharm all the way to AI to robotics. I mean, these are things I would have never, ever experienced or understood if I stayed in medical school.
Right.
And I think that's part of it. And then the opportunities come, you have to seize it, right? And you have to, sometimes it's a hard decision, but you have to seize those opportunities.
Right. That's awesome. So you did 3.5 years there. And what's the next step from there?
So,
obviously you started at like, I need money.
Exactly.
From going up the ranks, right? Where did you end up there?
So I finished as an associate, but then sadly, right, it was the end of the dot-com bubble.
Right.
Everything that was the internet that used to be high-flying now has gone bankrupt. And I remember there was a deal that we had. It was a startup for a Spanish language portal. Mm-hmm. And AOL Latino had just launched, and it was one of the first Spanish language websites there was. And it's basically an aggregator of content.
Right.
And we had something in the marketplace. The guy had never done any internet business before, and all of a sudden it went from had zero revenue, and it was being valued at like $500 million. And there was investors clamoring. Yeah. At that point, it's like, you knew something was wrong, and we ended up getting a lot of investor interest. Was able to raise capital for it, but literally 6 months later, that business just disappeared.
You had the word .com.
Yeah.
It was valued a lot.
Yeah,
just because it didn't even know what half the people didn't even know what that meant.
Right. So at some point, then in Tampa, it's a small marketplace. Mm-hmm. And my boss at the time just said, hey, it's time for him to move on. He had some really great investments that panned out really well, that went public, and it was just time for him to move on. So as a result, I had to move on. Right. I was one of the last two people in the firm. So for me, I felt like I needed to broaden my horizons in the business world. So at that time I did the whole interview with like the Big Four for accounting and audit, and somehow my resume landed up to Deloitte Consulting here in Atlanta. Mm-hmm. And they brought me up for an interview. Yeah. And it was either that or audit. I was like, I was like, no, I'm gonna do audit. Yeah. I took the job here, moved here, and got to work with one of the top consulting firms in the country.
Amazing,
And that taught me something different, right? They're all Fortune 500s, Fortune 100 companies. Right. So I've all been dealing with startups and early growth stage businesses. Now you get to see from the other side of
the guys that are acquiring those. Yeah.
Right. Like you get to understand what it takes to be a mature business. How do you scale? How do you maintain growth? How do you find double-digit growth?
And it's so different too.
Yeah. I mean, it's like the two opposites of a barbell, right?
Yeah, right.
So it was a fascinating experience. A lot of hard work, a lot of travel. I mean, AT&T was a client. We were in Seattle all the time. Then I found a niche in doing sports entertainment. So we did. I got pulled into a group where we helped. Here we helped launch the Civil Rights Museum downtown. We tried to get a NASCAR Hall of Fame here in Atlanta. Worked on the Jets Giants new stadium deal. Cool. Worked on the Seattle Supersonic sell to OKC, stuff like that, and that was fun and fascinating. But when you're on the road Sunday to Thursday every single week, you're like never home. No. And I always felt like education as a background is really necessary to kind of not necessarily just advance your career, but to set different foundations in your career. Right? So I wanted to go back and get my MBA. Okay. So you can't do that traveling, and you can't do that in consulting. No. So I decided I had to step away from consulting life and find a corporate job because I didn't want to go full-time MBA because I needed the income. So I got into Emory.
And are you married by then, or?
I was married at that time, and then I needed the income, and I did evening MBA school at Emory. I got a job at CNN in corporate finance and strategy and corporate development. And that was fascinating as well.
Awesome.
But it allowed me to go to school and to work, and it was a very interesting time at CNN as well. So you get to see the rise of news media, and you get to see it kind of hit its peak in 2008, and then see the change with digital coming through. And then in 2013, I got pulled over to Cox.
Okay.
I got recruited there.
Great organization there. Great people. Yeah.
The culture.
Talk about culture. Yeah, I was going to say.
I got pulled over there and into the Cox Media Group, corporate development team from CNN, and kind of rest is history. Just kind of moved along within the Cox organization. So.
And how long were you still kind of involved?
Yeah, so that was 2013. So this is
12 years.
Yeah, 12. So it's still, if you're at Cox, that's still considered a newbie, because most of the folks are like 20, 30, 40 years. Yeah.
Right. I mean, just a family and business. I mean, what a great, and the fact that they, I mean, for as big as they are, still keep it very low key, which is fascinating.
They do. They try to, as much as possible, stay out of the
I mean, as much as you can. Yeah.
But, you know, Cox is interesting. It's a great culture. Mm-hmm. It's a company where it's known to innovate. 126 years in business, fourth generation family.
That little room that they have, or I forget what it is now. It's been a while now, but I remember getting a tour there one time with some folks, and the little timeline in the history. Yeah, it is incredible.
It is.
You know, because we're looking at businesses buying, you know, once they're second generation, you're like, okay, it's a good time to approach. Yeah. And these guys are doing it for four.
Yeah. Not Alex Taylor, who's the current chairman and CEO,
great
fourth
person.
Generation.
Yeah.
You know, it's rare to get to that fourth generation.
Yeah.
It's rare to get to the third generation, right? And
it's rare to, you know, get the second generation is hard now.
Yeah. Right. And they started in newspapers, and went to radio, then to TV, then innovated itself by getting into cable systems, bought Mannheim Auctions to be the largest auction dealer.
No, it's amazing. I mean, it's one of those things where you usually see a shift when it goes from one generation to another, right? Mm-hmm. But their shift was like they innovated from there and like got better. Yeah. Every turn, someone got better. I mean, it's fascinating. And
that's the thing. It's like, it's hard. Public companies are great. You know, you work at public company versus private companies. It's a different way to operate. Right. Public companies, you have, you're quarter to quarter. You have to hit those numbers. You have to hit those earnings. Yeah. Private companies, we have growth targets. We have goals, but you're able to think differently. Right. You're able to react differently. Right. You're not pressured all the time. Like, I got to hit this quarterly number or else, right? Even if it's a bad deal, I still have to do it. Maybe I got to acquire that new thing because of the quarterly or whatever. Like the pressure is on. Yeah, and also the culture at Cox is it's okay to sometimes to fail, right? Yeah. Like they'll put people in different roles that they've never had backgrounds in. So that allows them to be uncomfortable and change and innovate, and that's the culture of Cox. Right. Like they empower the people to do things and make changes and grow. And as a result, the company has grown. Right? We disrupted ourselves over and over again. When we launched Auto Trader, we disrupted ourselves. It used to be it was the biggest source of revenue in newspapers is classified ads, and most of that is automotive. Right. Back then with print. And all of a sudden, we disrupted ourselves by saying, hey, Auto Trader, if we move that digitally, well, we're going to lose a lot of money on the newspaper side. But this is the future. Hard pill to swallow, but look what that has done. And that, Auto Trader became the largest, car selling website
it's crazy.
In the country.
And they also own Kelley Blue Book too,
and
right?
They bought Kelley Blue Book and merged it together. So they just historically have always been willing to transform, and that's been the key to survival, but key to growth. Right. And we've done that the last few years as well. We sold Cox Media Group.
I didn't know that.
Yeah, in 2019.
Okay.
That was a hard decision for the family. That's the legacy of the family.
Yeah, I mean that's how you started.
But broadcast media was struggling. Right. And in this day and age, if you don't have scale, you don't have negotiation power. Mm-hmm. And to the family's credit, it was a hard decision, but they had to do it. Yeah. And then recently, we're merging Cox Communications with Charter because you need scale.
That makes sense. Yeah.
And we're at number 3, the third biggest. It's not the same as being the biggest,
the
in
largest
terms of size.
Right.
You have no pricing power. You have negotiation power.
Right.
So that was announced, probably a month ago.
Wow.
And it probably, it might take 12, 18 months to close post regulatory approval, but that's huge. I mean, that's a huge transformation for the company. Right. Which kind of leads into what we do, or what I do. And that's, we've long known at Cox that we had 2 maturing businesses. We have communications and automotive.
Right.
They both throw a good amount of cash, but to sustain double-digit growth, sustain compounding durable businesses, and continue to have growth for the family, they had to think about diversification.
Right.
And that became 2016, 2017, when Alex Taylor stepped in. He said, hey, we need to think about what it looks like in 2034.
Right.
And he had big ambitions for the company when he stepped in, and he still does. And our group got tasked of, hey, how do we figure this out?
Right.
And when we think about diversification for a $20-some billion business, how do you do that, right? It's not media. It's not going to be telecom. It's not going to be automotive.
And then what?
So what is it? So we started with a group of 4, and we've kind of now expanded to 30 people. But we literally thought about all the different industries that the Cox family had passions in, and then try to figure out if we had a right to win, and how do you win in those. We came up with the thesis of, well, we don't want to play. We can't just go out and buy, a $5 billion business and just go and run it, right? We really had to think about how to do it as risk-free as possible. Nothing's risk-free, but we didn't want to just
great calculated risk.
Right. Yeah. We wanted to think about how to do it smartly. So we came up with the idea of invest to own. So you wanted to make bets in different areas, and then see that business grow and develop, understand what mechanisms work in that business to be successful. Right. And then at the right time, if it makes sense, then you increase your stake to a point where you can own it.
Right.
So we did that. We started in sustainability, clean tech. We had an opportunity to invest in Bright Farms, which is a indoor greenhouse. Grows leafy greens.
Right.
That was in 2018, 2019, scaled up over time, and then acquired it outright, I think shortly after COVID.
Okay.
That was our first acquisition of control of one of those diversification investments. Since then, we've acquired Axios, which is the digital news provider. We acquired OpenGov.
What is
last year. So it's a GovTech platform. So and it provides financial planning tools, asset management tools, tax, all that stuff for governments, local and state governments. So when you apply for, like in City of Atlanta or City of Sandy Springs, if you're applying for a license, a permit, whatever it is, you're going through the OpenGov platform.
Got it. Okay.
So it makes the front end for consumers digital, easy, makes the back end easy.
Thank goodness for that.
For the government, and it provides accountability to the government. So so we did that last year. Over $1 billion for an acquisition, and we're still looking through what the other things are. So that became the initial diversification strategy. Then since then, it's also evolved. We wanted to think about more of, hey, what are we missing, right? Like innovation comes quickly. Right. It's not just going to be, you can't spend 2 or 3 years just researching for an industry and figure out, this is where we're going to play. Yeah. By that time, a lot of things
are changing already. Yeah.
Exactly. So 3 years ago, we brought in Andrew Davis, who's the managing partner for Socium, and heads up our investment efforts at Cox Enterprises. And with him, he brought a lot of relationships. He was at T. Rowe, ran private market placements, so he did a lot of venture investing at T. Rowe Price. So wealth of relationships, wealth of experience. Right. And he was the one who launched Socium Ventures. Okay. We had our first fund in 2022, and we're on our second fund now. Okay.
And when did you get involved in Socium?
So I got involved in Socium with Andrew at launch.
Okay,
so,
got it.
I run the kind of day-to-day operations
Okay.
of it. And that premise is, hey, that is not your traditional corporate venture.
Right.
Like, there's no strategic purpose mandate for that. It is pure financial return. Now, something gets bigger and it does become interesting, great.
Right.
But that's not our primary objective. Our primary objective is like any other venture firm. We want to make bets and drive financial return.
The large exits.
Yeah. And that way we're seeing the whole picture. We're not blind to say, oh, we're just going to focus on GovTech or clean tech or whatever it is. We want to see the whole tech.
You're looking for good businesses.
Yeah.
Irrelevant to industries.
Yep.
Yeah.
So that became, if you think about kind of we call it our three investment thesis. You still have investment, but now you have this venture side.
Right.
So we can get into early growth.
Right.
We can get into growth stage businesses.
Right.
And we can be a partner and develop those relationships and watch those industries transform, all while making a return.
Right.
And then we have this middle bucket, and this is more kind of growth stage, late stage, and that's where we have what we call opportunistic investing. Right. Still same thesis. Still, we want to generate primarily financial return. We don't have to own the business. Right. But things that go outside parameters of Socium Ventures in terms of kind of investment criteria, then we can invest through Cox Enterprises and its balance sheet with much bigger check sizes, 50 million, 100 million, 200 million, whatever it is. If we think this tech business makes a lot of sense. So that gives us this unique
So it's like a large joint venture, if you will.
Yeah. I mean, it's a large platform opportunity for us that we can invest at every stage and every cycle of a business. Right. I can't think of any venture firm that is able to do that.
No,
right? It's a competitive advantage for us. But it also gives us great insight into what the marketplace is doing. Right. And hopefully, ultimately, that can help both the startups and can also help Cox. Right?
It's a win-win.
Yeah.
You guys everyone's aligned.
Exactly. Right. So it's a very unique proposition for us. Right. And we have, we're grateful we have that opportunity from the Cox family to leverage the Cox Enterprise balance sheet to do that.
That's incredible. It's incredible. So what are you seeing there? As far as market, there's so many different trends and everything, and I'm sure AI is absolutely, the crux of that. How do you identify an opportunity? How are you getting that?
So I think for us, it is the relationships. So for us, we have with Andrew, and we hired our first full-time hire is David Yang, who's a investment partner for us out of New York, your neck of the woods. Yeah. But they have great relationships that bring in with other VCs, with big banks and whatnot. And those relationships really help us mine through what are great investment opportunities, what are great businesses that have founders with great track records. Right. And it's, one of the interesting things about successes for startup companies is, for whatever idea there is, there's always going to be 5 to 10 other people doing the same thing, right? So how do you win in that situation? Right. How do you become a market leader? How do you grow? And a lot of it is the relationships you have, the investors you have. It's got to be the right set of investors. 100%. And those relationship between investors and the founder have to be strong, and it has to make sense. Right. You can't take money just to take money. Yeah, right?
I see that all the time. Yeah. And people take the highest bid or money or whatever, or best interest rate or, capital structure. However, and then what? Right. I'd rather get a good partner that could hold your hand, and now the founder could focus on what he or she does best. Yeah. And now you have someone in the back just kind of, helping expedite growth, mentorship or whatever it may be.
Yeah. I mean, so we have a stable of strong VC firms that we have relationships with, that we're trusted partners with. Right. We partner a lot with these guys, and we'll introduce them to deals. They'll introduce us to deals. They can get us into deals that probably a lot of others can't get into. Right. And it also helps that we're Cox too. You can always leverage the Cox Enterprise name. And they know, once they understand who Cox is, they also understand the unique proposition we bring to the table. We're not traditional VCs have a time horizon, right? 5-7 years, 10 tops.
Right.
But there's something has to be done, right? Yeah. Like once a fund is fully deployed, there's only limited amount of resources. Right?
Yep.
For us, that's not the case. Like we have a long-term horizon. We're not pressured to say we have to have an exit event in 3 years or 5 years.
Right.
We can be patient in how we do things. We want to make sure the growth company has the right people, are growing at the right pace. They're not having to just take money to take money.
It's your public, model, right?
Yeah.
You have to hit the numbers.
Yeah.
And you know what? I see so many businesses get destroyed in that rat race where you have 36-month horizon. Mm-hmm. And it's month 30 now, you're like, all right, guys, we got to go. Well, there could be something great coming or another acquisition, but you're like, no, we got to go. Mm-hmm. It's terrible. I mean, you're managing it through a spreadsheet, not emotional.
Yeah.
Is the business ready?
Yeah. Yeah, exactly. I mean, OpenGov is a great example, right? When Zach Bookman, CEO, love Zach. He is a visionary. Mm-hmm. And when we first met with Zach, we were only able to be a small shareholder. We actually had to convince Zach that we belonged on the cap table because they didn't know, he didn't know, and the company didn't know, who Cox was, and we had never done anything in public sector from a tech standpoint. So, but once he understood who we were and what our vision was, it was a great pairing. We got on the cap table, very, very small percentage. We weren't even on the board; we were just board observers. But we have one of our leads for GovTech who sat as the board observer, Davis Robertson. He did a great job developing that relationship with Zach.
Right.
And then we were always there as thought partners. We were always willing to help him think what's best for his company.
Right.
And then he had a transformative opportunity to make an acquisition through OpenGov. Mm-hmm. And we said, hey, we'll write the check. We'll partner with you. We'll help.
It's the right thing for the business.
Yeah, it's great for the business. It helps us because we can gain greater ownership. Right. But we'll partner with you. We'll be along for the ride. We were part there for all the management meetings with a target company. Right. We worked with the investment bank that they hired to help run the process. I mean, and that was a great partnership. Right. And it has become a very, very great acquisition for OpenGov for its business, and they almost doubled in size, right? And we wrote the check for it, and that actually helped us get even greater conviction in that business, to where I think about a year and a half after that is when Zach and us had a conversation over breakfast about, hey, could Cox be the owner of the business, right? And be and that was led to us completing that acquisition less than a year later. Awesome. So and that is a kind of a great story, right?
Yeah, it seems like it's
a great journey.
To what you just said, it's very organic.
Yeah.
It wasn't forced and like, oh, knock. Yeah. Here's the legal letter. We have to sell. Like, no, it's not that way. Yeah. It's the right thing for the business.
And we wanted him, and he has full control of the business, right? He's running it the way he wants to run it still. We empower him and his employees to do what's best for the company. Right. But it is the story of how we have thought about how that investor-owned process should work. Right. It's been and the partnership developed through that. That's awesome. And I think that's unique. I don't know any other business or VC firm.
Sounds like you guys are the good guys of venture capital.
I don't know. I mean, there's always the good and the bad. I think for us, Cox prides himself on developing relationships. Right. Relationships for vendors, portfolio companies, employees, everybody. That's first and foremost at Cox. That is the culture. Right. It's not necessarily being the good guy, but being a good business partner. Right. So telling our portfolio companies hey, listen, this is not the strategic path you should be going on, so that we can be the trusted advisor. Right. And I think that's a big difference from what we're doing. And and a lot of firms that we have good relationship with, they're advisors first, right? You're on the cap table, you're an owner, but you're also an advisor.
Right.
And for the CEO, the founders to trust you, they got to see you as that, right? You're not the one at the board table saying, no, you're doing a terrible job. Why aren't you hitting your numbers?
Right.
There is that. Right. But you have to understand why and how can we help? And I think that's the key of smart investing.
Yeah,
right?
you could complain all you want to, but if you don't fix it, course correct it, it's going to be the same thing the next quarter again.
Yeah. I mean, it's not like we're going to throw good money after bad money.
Of course.
But we are going to hold you accountable.
Right.
But we're going to do it in a way that we're trying to help you.
Yeah.
Right. We're not trying to hurt you. If somebody's going to come in with a great term sheet, that's wonderful. Right. But is that term sheet really going to benefit you to hit your goal down the road, right? And that's the key. Like, we want to be sure that we're offering good counsel that's not just about Cox and what we're here for, but what's best for everybody.
Best for the business, yeah.
So
if the business wins, everybody wins.
Exactly.
Total alignment.
And I think, the horror stories in the venture world sometimes is, hey, the VC firms are screwing me over as a founder. And there are going to be that way, right? But there are a whole host of other VCs who are not that way. Right. And I think for founders, you have to be smart. You have to be able to do your own diligence on the investors, so that you know who's coming to your board meetings. You know who's going to be on your cap table. Right. So
and from the advising side, for me, I see that a lot. And then the founders there's two types of founders. One is that they take the first deal and they're so afraid to ask questions or interview. Like, you have a choice. Yeah. You don't have to do this deal. Yeah. And then the other one just goes for the biggest firm. And it's like, if you could just calm down. Yeah. Yeah. And take what's right for the business and how do you think they could affect and help your business. You're selecting a partner, not a capital stack or anything. Ultimately, you will be married to this person, venture firm, fund, whatever you're going to call it. But it's a long-term marriage. Exactly. What is the end goal you have in sight? Let's talk about that first. Yeah. But they don't talk about it, and they get in. They're like, they're forcing me to sell. Yeah. Well, they said that day one. Yeah. Yeah. No, you're absolutely right. I mean, raising money is like dating and marriage, right? Yeah. You have a choice of who you select. Sometimes you don't. I mean, sometimes you're only going to get one term sheet. That's fine, right? Yeah. But you have a choice of taking it or not, right? But if you've grown your business smartly, done it the right way, and things line up well, you're going to have competing term sheets, right? And no one VC firm is going to be the whole capital stack. You're going to have opportunity to have a syndicate. Well, building that syndicate is important. It is very important. And I've seen so many companies fail at the boardroom because there's disagreement constantly within the board members. You don't want that, right? You that's the last thing you want, because it takes away from what's important. Right. It happened to me personally. I mean, we took large amount of capital in my previous company, and from the banking group to the REITs, and their visions were totally different, and it hurt us really bad. But to your point again, it's just getting everyone aligned. But you're young and you try to do what's right for the business there, and then people, again, it's just having this conversation early helps tremendously. Yeah. So I mean, like advice to every founder: do your diligence as much as we do ours. Correct. And talk to folks, talk to other investors who've or other startups who know these, know us or know whoever the term sheet's coming from, and your investors are, because you don't want to be in the situation of you sign something, you agree to it, they're sitting in the board, and you're later and you're like, this is horrible, because there's nothing you can do at that point. Too late. So it's the dating, the marriage analogy is perfect. Yeah. Because except it comes the bridesmaid and the groomsman comes with attorneys. Exactly. Exactly. Yeah. So I think being careful, doing the diligence as founders, reverse diligence, whatever you need to do to make sure this is the right relationship. Right. And sometimes it's about before you even need to raise capital, you start building those relationships, because when the time you actually need it, you already know those people. You've already built that. 100%. With my advisor, so we're talking to some car wash company, great guys there, but we're like, look, we're going to start talking to people now, and they're like, well, we're not selling. I'm like, I know. That's why you want to talk now, because when that time comes, you're in a crunch. You just want to gauge relationships day one and start thinking about how that looks like. Yeah. It could be 7 years from now or 20 years. I don't care. Yeah. But let's put things on the map now and start thinking that way.
You know, if it doesn't turn out this time, right? Like if you don't match up this time, doesn't mean you don't match up later.
You come back again.
Later. Yeah.
Right.
But it's that relationship you just keep on mining and developing. Right. And eventually, even if you don't ever get a dollar from
it's just fine.
They could refer you to somebody else, or they could bring somebody else. And what people don't also understand is the investment community is small. It's not huge.
Very small, yeah.
People know people, right? And people will talk, and people will be like, oh, you don't want to work with this founder, or you don't want to work with these guys or these guys.
Right.
It's
very small.
That reputation carries itself.
It does, for sure.
And that's, it's okay to say no. It's okay, to not take a term sheet. It's okay to say yes to this group and not a no to that group. Yeah. But you just got to do your homework.
Yeah, and do it the right way too.
Mm-hmm. It's not just about the dollar.
No, it's not. It's not. It's more to it.
Yeah.
And then, the other thing too is that you mentioned a couple of things. I mean, look, you're the founder or CEO, whatever you are in the company. You're there for a reason. You've built a great company. You're there because you innovated or have a better mousetrap, whatever it is. You have an art that you got there. If you create the wrong, if you have the wrong partners or the wrong board or what are you going to call it, it's like going home and fighting all day long. Yeah. You'll never be able to focus on what's important.
Yeah.
And you lose that, that creativity in business, and you just can't focus. And I see that so many times with businesses too, where great business, but the wrong partners again. The fights and other things where you just lose track of your growth and the juice that got you there.
Yeah. And I think, for us, it's also the founders and stuff. When there are a lot of times when founders are good at doing a certain thing, right? A certain life cycle of the business they're great at.
Right.
But then you get to a certain place, that's not their specialty anymore. They could be visionaries,
100%.
Right? But they're not operators. They can't do the little detail stuff. You got to be able to take away the pride, right? And say, okay, I might need a COO. I might need a president. I might need to move to a different
I might need
level.
a CEO. Yeah. Or, I need to get out.
Yeah. I need to let operations run.
It's okay
and
too.
that I can be in a different role.
Right.
There's a lot of times when that also is the breaking point, right? And I think, making choices, going back to the very beginning of our conversation, making choices is hard. But
it's hard.
You get presented only so many opportunities in life and so many choices to make. Right. And you have to really think about the ramifications, the scenarios, and make the intelligent choice. Don't bring your pride into it. Do what you think it could be the best. Understanding all the consequences, understanding all the scenarios. And take the pride out, because that is, I've seen so many startups fail because this founder's like, oh no, this is my baby and I will not let it go. No. When they know that they can't take a business from $10 million to $100 million.
And it's a whole different business at that time. It is. And they're so accustomed, or community in general, so accustomed to having founder/CEO. It's like they almost feel like it's the same thing, and they're just two different people. Yeah. And sometimes one is better than the other, and they're not meant to be together. Right. Yeah, there's a few people that does it well. I get it. But there's a few people that does it well. Yeah.
It's very rare that a founder can take a pure startup and become a publicly traded company.
It is very rare. And the ones that did it well, we know them all. And that's it.
Well, I mean, that's why they call them unicorns for a reason, right? Yes. I mean, it is a different skill set to be strategic and to be a operator.
It is very, very hard.
And not many people can do
There's no shame of saying, I'm not that person. It's okay.
I mean, I look at it the other way. Do you want your business to be $1 billion, or do you want it to be zero, right? Like, if you have too much pride to know that there's two extremes and you're standing in the way, then
what's important?
Then you're not doing your fiduciary duty to your shareholders. Right?
I agree.
Because there's so many people who invested along the way.
Right.
And you have to understand that you're not just no longer doing this for yourself. You're doing it for everybody.
It's beyond you.
Yeah. So, that's part of getting the diligence we need in the relationship building.
Right.
Like, I want to know who you are.
Right.
Because you're not investing always in a company. You're investing in the people.
Human. Yep.
Right. So the more our team spends with the founders, get to know who they are, and the management team as a whole, you can understand better and better how they work.
I agree.
And they can understand how we work.
Right.
And it's a symbiotic relationship.
Right.
And if you can understand what makes them tick and what they're good at and what they're not good at, then you can help them. You can advise them.
Agree.
And hopefully you both are successful in the,
Right.
At the end.
Again, though, if you do it right and you're aligned, the results are, everyone's winning.
Yeah. The worst is when people. It doesn't matter about business. It's in general. When you're too proud and you think your voice, your thoughts are the only way.
Yeah.
You'll never be going to be successful.
No, or never hit the potential.
Yeah. Yeah. There's always that cap.
Right.
And I think the second part of it is the people.
Yeah.
We like to in VC. One of the favorite shows I used to watch is Silicon Valley.
Yeah, great show.
It's hilarious. Show. But it targets all the stereotypes of the VC world. But in reality, it's I find in venture you're almost serving others, right? You're providing these founders with the opportunity to get to their dreams and to create their dreams, and you're there to support them. And you're there to in a way to serve them.
Yeah.
You have these conversations. You're spending at least 4 or 5 times in person with them on board meetings and dinners and whatnot. And hopefully a lot more than that.
Yeah.
And there's a relationship that's built. So you're helping these folks reach what they've always dreamed of.
Their potential.
And that
sometimes they don't even realize it.
Yeah. And to see their glory, to see their happiness and joy when it gets to that point.
And the families get,
I mean, crazy. That is, we all benefit.
Yeah.
But that joy, I mean, I always.
You can't monetize that.
Yeah. My wife, we got married, I got remarried in 2022. Mm-hmm. And I retired from competitive swimming at that point. Like I had many iterations. But one of the things you always ask me is what, that competitive spark, what can replace it, right? And I think to me, there's no joy, quite the same joy that is when you win something individually, but to see somebody else
it's incredible,
it, right?
Yeah.
That's almost the same
you
level
can't
of joy.
quantify that as just sheer joy.
Yeah. And that is when everybody's successful, everybody shares in this joy. That's hard to replicate, and that's something that's I hope for all our portfolio companies, I get to celebrate that with everyone. So,
what advice are you giving your 13-year-old on when he says, "Dad, I don't know what I want to do in life"?
Oh, he knows. That's the funny thing. I mean, he first was being an NBA player. Now, if that doesn't work out right, his backup is he wants to be in business, and he's a young entrepreneur, and a lot during COVID, he discovered my basketball cards that I used to have when I was a kid. Yeah. He's like, started asking me what this stuff was, and I explained it to him. Then he realized there's monetary value with this, right? All of a sudden, he becomes a collector. Yeah. And we started, him and I started, a sports card trading company just for fun. And we'll go to card shows. Yeah. And he'll sell on eBay and whatnot. He loves it. He will negotiate. He will, look up prices. He'll, watch the market to see what, who's good, who's going to be good. And he's like, Dad, I need to invest in that. I need to invest in that. I need to get more of these cards. I'm like his VC now.
Yeah, that is awesome.
But it's fascinating for him, watching him to grow in that, doing his own little thing. Is he's learning business. Yeah, he's learning the art of buy.
It's the same trait.
Yeah, buy high, buy low, sell high. But negotiating, thinking,
acquiring,
thinking through what makes sense, because you only have this much amount of money. Do you want to put it in this, or do you want to put it in this? Is it a quick return, or are you going to invest long term? Right. We were actually just joking around a couple weekends ago. With the OKC Thunder and playing the Pacers. Yeah. And two of our players that we heavily invested in a long time ago was Shai Gilgeous-Alexander and Tyrese Halliburton. Yeah. Because when we first started collecting, I said to my son, like, you should watch these guys. They're going to be really good.
Yeah.
And he's like, okay, well, let's spend a lot of money and buy the cards. I'm like,
Yeah.
I was like, okay, well, we'll do it. And it's paid off for him.
Yeah.
Like he's like 3-4x his investment. And so he sold a lot recently. And he's like, Dad, this is great. Now I'm going to go and buy some more. I was like, okay.
We need to get him on the show, CJ. How about that? We need him on the show.
It's I tell him it's like making money. There's nothing wrong with it, right?
Mm-hmm.
But doing it smartly, knowing the risks.
Right.
You don't gamble. You make investments. They're intelligent decisions. You want to understand the risks that goes with it, and that's your due diligence. And as much as you can eliminate the risk or mitigate the risk, the more chances you have for success. Right. So what I explain to him is that basic. Do your homework. Right. Know what your pitfalls are. Right. And know what your risks are, and try as best you can to mitigate them. Right. And then you might have a good chance of success. But if you don't do your homework and just throw money at it, that's
called gambling.
Yeah, that's gambling.
Yeah. What advice are you giving someone that's in medical school now that is going through that moment, not to walk them out of it or talk them into it either? At that moment, what are you telling your younger self again?
I mean, if I look back, I think I should have listened to my gut, and whatever that is. It could have been to stay, it could have been to leave, but I fought that inclination for months and months and months, and it was making me terribly unhappy. Yeah. Like a lot of, like, you just sometimes your gut reaction to things, your gut is that voice, right? Like that's what you're told is your purpose in life. And to deny that, sometimes you're going to end up unhappy one way or the other. And that's I don't know, everybody will say, oh, that's just foolish, or that's just making a bad decision. But at a time, I just knew something was wrong. And and to this point, I've realized every time I don't trust my gut, I make the bad decision. And I that's my advice. Trust that gut instinct, because it's there for a reason. It's telling you something. And you need to listen to it. Consequences will happen, good and bad. But you can't fear that because you don't know. You know what today brings. You know what the present, that's what you can control. And therefore, you got to take that time, figure it out, trust your gut, and then do the best you can with what happens. Because, you never know.
You never know. So many entrepreneurs seems like they don't make that jump because of the fear of failure. And we said that earlier. What is your advice to that on failures? Because you don't know it's going to happen one day or another. But
this is what I coach my son's middle school basketball team. So this is what I tell them all the time. I don't care if you fail. You shouldn't care if you fail. Failure is just part of it, right? In reality, you actually never fail. It could go to zero, but it's teaching you a lesson. You need to. Your job is to understand why you failed. If you understand that, then you can get better at it, and you can build upon it. So with startups, I mean, most startups are going to fail anyway. Not everybody's going to be a unicorn, right? But if you don't take that chance, if just simply because you fail, or your fear of failure, you're lost. You've lost from before you can even start. And that's where I think, I try to tell people, because I was paralyzed by that too. Like the consequences to me of winning and losing was black and white. There was no middle ground. But as I gotten older, I've realized there is a middle ground, because it's not black and white. It's not the result. It's the journey you go through. And if that journey means it's bumpy, it's a roller coaster. And if you learn from all the pitfalls, then that journey is smoother and smoother and smoother. Even if you have to start over multiple times. I mean, I can't, in my own life, I don't know. I mean, I've started over multiple times. And sometimes not by choice. But the failure would have only existed if I gave up, right? If you don't give up, you're learning, you make yourself better, you will succeed at some point. So
give me the moment during Olympics. How's that feeling? So you're about to go, right? I'm sure heart pounding, people everywhere. How was the experience like?
it is the most nerve-wracking thing you can ever imagine. For me, any competitive situation, I get really nervous. It's that anxiety that
like,
builds
I don't
up.
even know how you stand still and like wait for that timer just to jump in. Like I would go way too quick or too late. Like
yeah, I mean, you get to that point, you're just a bunch of nerves.
Yeah.
Especially when they put you in the green room for 10, 15 minutes before you even walk out with your 7 other competitors, and it's quiet. Some people are doing their thing to try to psych you out, but you have to be locked in.
Right.
And there's no outside noise. You're just got to be focused. Mm-hmm. And then anxiety, the level just builds and builds and builds. But what I learned, once you get behind the blocks and you're ready to go, there's just something just zones out, right? You hear nothing, you see nothing. It's just you. And I think for me, that's like, there's nothing that's been able to replace that, but it's just like you get this tunnel vision,
right?
Because then I always tell myself, I used to get so nervous. I'm always like, can't sleep the night before, or whatever. But if you're not nervous, you're not ready, right? Yeah. And then this goes back to the whole concept of trusting the journey. Because if you've done your practice, you've done your training, when you get to that point to race, you can't control the outcome.
No.
You could have the best swim of your life if someone could blow your, you right out of the water. I mean, I've had that. Back in 2000, I was like swam one of my best races, and Michael Phelps beat me by 4 seconds. So he had the flu and 103-degree fever, and I'm like, okay, it's time to retire at this point.
That's a good one to lose to.
Yeah, but you can't control your outcome.
Yeah.
But you've done the work, so when you step up behind a block, you gotta believe in yourself and have the confidence, and just go for it. And I think that's the key in all aspects of life. You're going to have anxiety. You're going to panic. You're going to be nervous about things.
It's called being human.
But you got to trust that you've done your work. If you've done your work, then you've done what you can do. Right. And then just go for it.
Right. I'm sure it's very different for individual sports than team sport, because you have no one else to blame for. Yeah. It's you. And that's it. Yeah.
No, I see that with, so I started coaching my son's middle school team a couple years ago. And then I don't think my wife signed up for this, but it's like, it's one of those things where when you're an individual sport, you only have to worry about yourself. Yeah. And then coaching, I never thought I'd coach, but
it is the hardest thing. I tried it for a couple of seasons with my kids' soccer. I am the worst. I feel like I'm going to choke my kids.
Well, it's funny. It's like, I got into coaching solely because of my son. They needed a basketball coach for their middle school. It was a small little middle school. And so I played basketball in high school. I was like, I'll do it. Yeah. And my son wanted me to do it. But I realized it's like, when you're individual sport, you feel you have control of something.
Right.
In a team sport, you don't, right? You can do only so much, and you have to rely on others. Right. And as a coach, you literally have no outside of certain things you have control of. Yeah. How it happens on the court, very little control. Yeah. But it is interesting. I watch my son, I watch my players. It's like how you work together, right? The way you interact with each other on the court, on the bench, off the court, all matters, right? Yeah. So. One of the things I've learned from this experience of coaching and how with businesses, the management team is that team. How they are cohesive, the
chemistry,
how they work together. It is so vital to success, right? Yeah. Like the CEO, the COO, CFO, they all got to be in sync.
They're not talking,
right? If they don't have the same vision, they don't know how to support each other. They don't know how to push each other. It's not going to be successful. No, right. And that's also a dynamic when we do diligence, really understand the whole team and know exactly what we're getting ourselves into. Because if they can't work, I remember we had one opportunity. It sounded great. Like the business could have been extremely, extremely, successful. But they were raising a Series B. They literally had 7 different people on a call. And that's a founder, and they had the entire management team. And they were talking over each other. Then one guy had no idea what the other guy was doing. It was the most dreadful 2 hours I've ever had. Yeah. And at that point, I was like, no, I don't care how great the technology is. Yeah. You said the 7 people, they obviously don't know how to work together. So it was an easy no for us. Right. And I don't think they've been able to raise since because what people don't understand is what you put out there and how you work together is hugely important.
Matters.
Teamwork.
What's next for you?
What's
the next chapter? I mean, you're not. I'm not very impressed. You just lost to Michael Phelps. Who loses to Michael Phelps, man? But besides that,
I've lost him many times. He made me realize just kind of like where he is and where I am. So, no, I think, I say it's my son's time to shine, right? Yeah. It's watching him, supporting what he wants, his dreams. I love being at Cox. I love what we're doing. We're going through a transformation in our next wave of life after the merger with Charter, and it's just a lot of unknowns, but it's exciting. Yeah, I think we have an opportunity at Cox to transform to be Cox, whatever 3.0, 4.0, whatever it is, to leave, for the fifth generation of the Cox family, something even bigger and brighter. So I'm excited for where we're going there, and what my role is to help with that, and my whole team. I think it's very unique when you're at a 126-year-old company and you're in a group that can dictate what happens to it in the future. Yeah. If we do stupid things, we'll have bad outcomes. Yeah. My team are just incredible individuals, incredible people. I have a lot of confidence that we're going to do something great for Cox, and my son is, as you can tell, he's a budding entrepreneur, and if MBA doesn't work out, and if he doesn't hit his 7-foot growth spurt, he's got a backup plan. So
that's amazing.
But you kind of get to the point in life where it's not about you anymore. It's about everybody else. Right. And, you have your kids, and you watch them grow up, and you're like, this is the future.
You're always coaching.
Yeah,
and the joy of your kids winning, so much more than you'll ever.
Granted, we don't win that much. We're a small little private school. We have to compete against bigger schools with better resources. But I've got kids on my team who never touched a basketball before. Yeah. And at first, when I first coached, I was like, "Oh my god, it's so competitive! I can't handle this." We're like 0-9. I'm like, how is this possible? Yeah. But you see their growth, and you see how they take to teaching and coaching and develop in the character building. And in the end, we were, like this season, we started 0-4 and we ended up 2-5. But the development. I remember one parent came up to me afterwards and said her son had never played basketball before, came out to tryouts and wanted to quit the next day. Yeah. But he stayed, and then he worked hard. Credits on him. He put in the work. He took the coaching, and by the end, he was a solid contributor. Yes, he scored. He got rebounds, blocked shots. For a kid who's never played basketball before,
and wanted to quit.
Yeah, and then his mom's like, he can't stop playing basketball. He loves it. He watches it now. He plays it constantly. Wow. And at the end of the day, that's what it's all about, right? And
it's life lessons, and that's going to take him to somewhere else,
right? And that's the beauty of it. And there are a lot of things you can't make big impacts on, right? Especially from the people. That's one thing I missed about med school. Yeah. In healthcare, you're impacting somebody every day. My wife, she's a speech therapist, and she works with hearing impaired kids, and every kid she interacts with is a positive impact to their future. Right. And I'm like, I don't necessarily know I do that, right? Like I move dollars around, I make investments, and hopefully they pan off. Right. But I don't necessarily can say I truly make an impact to every single person I meet.
Until the exit, my friend. Until the exit.
Yeah, but with coaching, and I get to see that. I get to interact with the kids and help them build their character.
And I'm sure you're learning so much from them, too.
Oh, yeah. I've learned a whole lot. Yeah. I've also learned that I tend to be quite a yeller and screamer in basketball practice. So... but that's things that truly make a difference in life, right? That you may not be able to do just a normal course of your job. So, it's fascinating. Again, random opportunity, and if I said no, I would have missed out on a lot of things. And
you just never know.
You never know.
You just never know. Give it a shot.
Yeah, and that's, I think, anything to take away from this is take those opportunities. They don't present themselves much often.
Seize the opportunity.
Seize it. And don't fear you're going to fail. Don't fear that it's out of your comfort zone. Be uncomfortable.
Right.
Take that risk. Smart risk, but take the risk.
Right.
And you never know. You're going to get something out of it for sure. I mean, it may be a pot of gold. It may not be, but you're going to learn something along the way.
You'll meet amazing people along the way.
Yeah. And it's life is a journey.
It is an incredible one at that.
Yeah. And, and we wouldn't be having this conversation if otherwise, right? Like, I think all of us are presented, you were presented opportunities in your life and you said yes to, and therefore you're where you are. And,
we do it every day, right?
So,
how does your parents feel now? Going back to that.
I don't know. No, I think they're great. I think they're happy. They're happy.
I'm just worried about your dad. Like, is he okay now?
No,
like,
I think he's okay.
Does he still get the blame?
No. I'm sure my mom will still be like, it's still your fault. He was unhappy for those 2 years. No, it's they're happy. I think once they realized, once I got a real job, right? Yeah. Like, then they were happy. And then now that they can see the results, the fruit of the labor, I guess you would call it. They're happy, and
that's awesome.
They don't have to worry.
That's awesome. Well, thank you so much.
No problem. Thank you
for giving us the time here. Learned so much from you. I'm sure we'll be in touch and keep on talking about basketball cards, and my kids love basketball and all that cool stuff. So
we've got my son's got basketball cards. He's just like giving them away these days.
That's awesome.
It's a pleasure.
Thank you so much. Thank you. Thanks. Pleasure.